Hey guys, welcome back to my channel. Today I want to talk about what is called psychological levels and round numbers. As you can see by looking at the charts, there are just so many lines, and these lines are psychological levels that I've drawn. We have the thick line, which is the main psychological levels, and the dotted line, which is like what I call the minor psychological level, and I will explain that in a minute. So, what exactly are psychological levels? Psychological levels are market price levels, which are often key levels in Forex, denoted by round numbers. And these round numbers frequently act as levels of support and resistance, as you can see by on the charts, whereby these levels have been respected, forming resistance over here and support over here and here as well. So these psychological support and resistance consistently work because of the fundamental human position. Human beings value simplicity, and from the trading perspective, this means valuing whole numbers. So when we talk about numbers in Forex, like if I'm talking to another Forex trader and I want to talk about a certain level, I would normally identify the levels by whole numbers. So for example, I would say 1.4 level, 1.43 level, 1.44 level, and so on. So these whole numbers usually hold a lot of values, and this is the levels that most traders look at, and that is why price tend to respect these levels. So traders often use these numbers as entry, exits, or stop loss or stop levels, and these stops and limits can alter the order flow and price changes in the market. So how do we identify psychological levels? So traders would often call these whole numbers double zeros. So numbers with double zeros, or sometimes triple zeros as well. And I like to say more zeros there are to the number, the stronger the psychological level is. Okay, and these prices are often even numbers. For example, in Euro USD, you would see 1.3100. In GBP USD, as you can see from the charts, like 1.42. 000, 1.43000, and so on. And some traders like myself take this a little bit further and take the numbers in between these whole numbers, as you can see by the dotted line here. I will call this number 50s. So these are normally like 50 pips difference between the major psychological level and that minor psychological level, as you can see 1.41500 or 1.40500. So these are normally 50 pip range. So normally when I trade psychological levels, I normally would take my trade around that psychological level and aim for a 50 pip move, or sometimes a 100 pip move, depending on what I see in the markets. Right now, these psychological levels, to trade them, are not always, they're not 100%, they're not perfect. There are some advantages and disadvantages of using psychological levels. Okay, one advantage is that it serves as a key level of support and resistance, as I've described earlier. Another advantage is that it is easy to identify for novice traders. So for example, once you just look at the chart and you look for areas that have triple zero or double zeros, you know you're at a psychological level. And it can also be implemented in all financial instruments. So you can use it in forex market, in crypto market, you can use it in options market, as well as the stock market. Okay, some of the disadvantages are that it's not always 100%, like I said earlier, and sometimes these levels work, sometimes they don't work, and so this level should be used in conjunction with other supporting indicators or technical analysis tools. So you can use it in conjunction with price action, with candlestick patterns. You can use it in conjunction with trend lines, or with technical indicators like stochastic or RSI indicator. Okay, So I'll just quickly show you, like I've showed you earlier, the psychological levels. As you can see, where anytime price gets to this level, it respects it, gets here, respects it, here as well, and here. Okay, so what I'm going to do now is that we're going to backtest this strategy together, and I'll backtest it on the 1 hour time frame. Currently we're on the 4 hour time frame, but I'll use the 1 hour time frame to backtest this strategy. So like any other strategy, first of all you have to do your top down analysis. So let me just backtest and put this just at a random area. Okay, so let me just put it there. Yeah, good. So with all Forex strategies, you always have to do a top-down analysis. Okay, so I'll move from the daily 4 hour then down to the 1 hour to take my entries. Okay, so from the daily time frame, you can see that price is in an uptrend, right? So that means whatever we're doing, we'll be looking for buy opportunities. So this is our main trend. All right, so our current trend as well is also uptrend. Price is making higher highs and higher lows as well. So breaking this previous resistance level and making a higher high. Alright, so we'll just be looking for buy opportunities here. Okay, so to enter, we'll go into the 1 hour time frame, and as you can see, we are currently on a major psychological level after price bounce off these what I call minor psychological levels. Okay, so here we'll be looking for buy opportunities. So normally I use candlestick patterns to look for any reversal patterns like engulfing candle or bullish pain bar or a bullish inside bar. So also looking at this, you can see that price has formed a double bottom as well, this here down, and it's gone back to test this. So we'll see how price reacts to this level. If it forms a reversal candlestick pattern to the a bullish reversal candlestick pattern, I'll take it buy. If it breaks this level, I'll be looking to enter on a retest and take my profit at the next psychological level. So let's see how price reacts. So that was a very nice break of this psychological level, and let's see if there will be a retest of this level. Like I mentioned earlier, I'll just be taking only buy opportunities. Okay, so price has gone to retest this level. If price breaks above this level again with a strong bullish candle, I'll enter the buy trade. Okay, so let's see what happens. Okay, so price went down here, but you can see there's some bullish pressure here. Okay, because price closed at just above 50% of this candlestick. So I wouldn't rush to sell this trade yet, because I know there are still buyers in the market. Okay, all right, so you can see from this candle that sellers tried to push, buyers tried to push, but sellers overtook them and formed this very strong bearish candle. So I wouldn't enter now because price is already far gone. So I'll either wait for a retracement or wait for price to get to this level. Like I said earlier, my bias is more bullish than anything. Okay, nice. So as you can see, price tested this area multiple times before breaking and closing above this area. So I will take my buy trade around this area here. So like I always say, you need to watch how price reacts to this psychological level. I'll put my stop loss just below the structure here, and my take profits just at the next psychological level here. So you need to know how price reacts to this psychological level, and you have to be very patient and not rush into entering a trade. You need to know which direction the trade is heading before you enter into the trade. So I know that the direction of the trade is bullish, and so all my trades will be bullish at this point. So take profit hit quite fast. That's 46.5 pips in the bag. Okay, so again we'll be looking for more bullish setups. Okay, so price has gotten to this next psychological level here, so I'll either wait for price to retrace down back to this level here, or see if price breaks this level and give us a good opportunity to enter more buy trades. Remember, our bias is still bullish. Nice. So price has finally broken this and closed above this psychological level. So as you can see here, price tested it multiple times here, but never closed above it until this candlestick, and price finally closed above this. So I would take my buy trade over here, my stop loss just below this candle, and my take profit right here at the next psychological level. Good. So take profit hits as well, another 47 pips down in the bank. Alright, so this is how psychological levels work. Price always reacts to psychological level. So to trade them, I just used candlestick pattern, but I did not use any other indicator. But if you used other technical tools, you can fine-tune this strategy and it can work better for you. So you can go back test the strategy before using, and see how well it works for you. It's a very good strategy for beginner traders, because it's very simple. The levels are very simple to identify. You can try it, back test it on several currency pairs and see the one that works well for you. Alright, so I hope this has been very helpful. If you like this video, please leave a like and subscribe, and I will see you in the next video. Peace.